Alright, greetings friends, Weston Nakamura from across the spread in Tokyo. So it is, what is it, Wednesday, August 7th. It is a little bit after 6, it's 6:30 p.m. in Tokyo. Now, half hour prior to, I hope that this works. Oh shit, there's a lot of lightning behind me. Okay. Half hour prior to market close. As you can see on this chart, I called for top tick once again. Actually, last time I said bottom tick. This time I said top tick on Nikkei futures. That's in red. NDX futures, that's in purple. And dollar yen was really the call, and that's in white. And the reason I'm saying the equity indices top tick is because of the dollar yen top tick, because that's the driving force behind it. Okay? As discussed in my previous videos and my entire crowd strike, yen strike, 152, most important, support level, all of that kind of thing. If you want to know if it worked out, look at the markets being down like 13% in a day, okay? Yeah, it worked out, okay? And by worked out, I don't even mean directionally it worked out, although that too. What I meant was dollar yen 152 at that time. That was the key support level that all of these other macro assets, macro markets was resting upon. And I identified it as a support level, meaning it doesn't matter like if I called it for a short-term bounce, which I did successfully. What I was saying was that it's either going to bounce off of 152, in which case all these the Nikkei index, the Nasdaq index, all that are going to also bounce wherever they are respectively, because they're following dollar yen. But they're going to find a reversal, or if dollar yen gets cut through on spot USDJPY, then the Nasdaq and the Nikkei has a lot more plummeting left to do. And my first call that I made, I said the time frame was day to days, okay? And indeed, day to days, we bounce off of 152, the Nikkei and the Nasdaq saw upside from there. Only for a matter of day to days. Then we come back down to test 152 on dollar yen, and we absolutely slice right through 152, and we fall another, I don't know, 10 handles from there. And then this past Monday, the Nikkei index had a minus 12% day, intraday. And I think that the Nasdaq and like Euro stocks were totally fine though. Oh no, they weren't. They had horrendous days too. Okay? But I think that everything else was fine and nobody was panicking. Oh wait, no. People are calling for Fed intermeeting rate cuts? So, regardless of whether or not you think that's ridiculous, and I personally obviously think that the whole rate cuts thing is ridiculous, and I have a totally different angle on that anyway. The point is, what I was right about wasn't the direction of the call. It wasn't that I made a fucking killing off of shorting Nikkei. That was probably my best single-day trade ever on index futures for a directional bet. Single-day 13% decline. And by the way, I opened the trade, well before that because the Nikkei had plummeted 5% the prior trading session on Friday. That aside, that's not what I was correct about. What I was correct about was, indeed, 152 was a key support level for everything else. Okay? And that's what you had to pay attention to. And so however that applies to you, or if it doesn't apply to you at all, and you're not even listening to, that's fine, but it's something I had to flag. Okay? So, with that said, I'm now back with an irresponsible call. I have this red top tick. Okay, that's half hour before market close. After this rally, this huge rally in the Nikkei index in red, and NDX, like around from 10:30 this morning. This is during Japan cash hours, and I said into Japan market close. Well, if you look at this chart, it appears that indeed that was USDJPY top tick, and then you saw the declines of Nikkei futures and NDX futures. Okay? Now, I also, if you see, look at it, I said it's in the immediate term for the immediate term. And that's exactly what I meant, and that's what I'm talking about. Okay? But I will actually even say right now, these are live markets that you can see. And by the way, look at the bottom right corner, time-stamped, okay? So all those people out there who have accused me of manipulating charts after the fact, First of all, you're not really real people to me, so I'm not going to spend too much time or thought on you anyway. Second of all, I don't need to do that. Not that I'm the greatest trader ever, but I'm skilled enough to, or confident enough in my skill to at least put it out there. And when I'm wrong, it's going to be out there for everybody to see anyway. So I don't need to, like, manipulate things, alright? And third of all, though, you can go fuck yourself, okay? So, I think that I can make a similar call now. Alright, and here's how I'm now looking at things in terms of green and red blinking tickers. First of all, USDJPY, the yen is still very much highly correlated to these equity indices, as you can see in this particular move on an intraday basis. I hope that this works. So I actually did start recording this like right after the cash closed, but it didn't really, like, I was running too many systems. The video was off. Either way, here are resistance levels and support levels for the yen. Now, those look like very weird figures, do they not? Isn't dollar yen like at 147? What's 0.0068 and 0.0069, all that? Well, those are yen futures quotes, alright? So, here is what I have done. Let me get rid of the equity indices, okay? That's dollar yen, right? What I've actually done is, this is really a chart of yen futures. I'm even going to get rid of dollar yen. Okay? Yen futures. Yen futures are quoted, by the way, it's on this left panel here. Yen futures are quoted as JPY USD, and that's why you see those kind of weird, like, decimal point price levels. And by the way, I'm not going to keep referring to them throughout this video as 0.0070 or anything. I'm just going to say 70, 69, 68 on yen futures, okay? And this bottom panel, this volume panel, that's for yen futures, because spot FX does not have a volume panel, typically, unless you're trading through like a, you know, specific broker, but that's just that broker's panel. But global FX is OTC. It's not on an exchange. Futures are on exchange. That's why futures markets can be very useful, because you can see volume profile and volatility profile too. You can see when activity is happening, okay? All right, so that's what yen futures on CME look like, all right? This is what dollar yen looks like. That's this first right panel. And obviously, they are mirror inverse of one another. So, what I've done is I'm going to take the yen futures chart, and I'm going to invert it like that. And obviously, they're going to match up perfectly now that I've inverted it. You just have to know that this green line going down, the yen futures, that's inverted. Okay, so when the green is going down, that's the yen getting stronger, and vice versa. And the reason I'm doing this is because it's much easier to visualize. All right, so again, white, that's spot dollar yen. Green, that is yen futures. Green bottom panel, yen futures trading volume. I'm going to invert yen futures. Okay? Now it looks like this. And now, what I've identified, after dollar yen broke through 152, that 152 support level that I had been flagging, okay? And then I also said, though, more importantly, like I just mentioned, because I'm identifying it as a support level, it means that it'll bounce off of it, or if it goes through it, it'll really go through it. And what happened? This happened. Okay? So, indeed, that was the key, most important price level in global macro, green and red blinking tickers. Alright? So now, I'm saying we have a whole new set of green and red blinking ticker price levels and support levels of resistance that dollar yen is moving to, and therefore, the rest of global macro and major equity indices are moving to, or are abiding by, okay? And so once dollar yen had broken through 152 and plummeted well into the 140 handle, okay, and you have this huge rally in the yen that was kicked off, by the way, on July 11th at 8:43 a.m. Eastern time, okay? 13 minutes after USDPY, when the Ministry of Finance came in from Japan and stepped in and they performed a yen intervention and they slammed dollar yen down from about 162 to 157.5. That's this part right here, okay? This is top tick on NDX, all-time highs. It's top tick on Nikkei, and it's been top tick since. These indices have been... Let's see what the bottom, where they went to. Because I actually want to know myself. Okay, so the Nikkei had a 24% drawdown, and the Nasdaq had a 14% drawdown within the space of not even a month. Okay, so from that yen intervention moment downwards, you have dollar yen down 5.6%, Nikkei is down 11%, and NDX is down like 9%, 10% or so. From yen intervention moment to bouncing off of USDJPY 152 support level. But then in total, the drastic sharp drop, again, that was 152 on USDJPY. All right. No, it's not because of any other fundamental reason. It's not because of the central banks. It's not because of the Bank of Japan, for that matter, who shock hike rates. All of this was in motion from, as I showed you, July 11th. Okay, so like the Bank of Japan shock hiking rates and all that, and that like strengthened the yen. Yen had already gotten pulled, yes, by Japanese authorities from the Ministry of Finance. Yes, working in coordination with the Bank of Japan, to do so, but wasn't Bank of Japan's shock rate hike policy in and of itself. And in fact, I would even argue that the slump that you see, the very excessive slump that you see right here, that came right after the Governor Ueda hawkish surprise rate hike Bank of Japan meeting. And I would suggest that that move also was a yen intervention move. That was also the Ministry of Finance that did that move. Okay? Because that was, by the way, that was the first day on the job of this new guy, Mimura Atsushi. He's the new Ministry of Finance Vice Minister of FX Meddling. Kanda, who was the previous guy, he's the guy who started doing yen interventions in the first place and entrapped Japan in this never-ending war against markets, to fight for yen upside. That fucking guy, who should be, fired, I mean, he's retiring, right? His tenure came to an end. He had also, coincidentally, I suppose, for doing such a fantastic job of currency mismanagement, he was recently announced as, a special advisor to the Kishida administration. I don't know why. Perhaps it's because there is a September leadership election in Japan, and there's also the next Bank of Japan meeting is in September, and so the yen is, the yen weakness is basically the reason, not the level itself, the exchange rate level itself, but just the general weakness of it, or the rising cost and the rising cost of energy, and the general economic and socioeconomic misery in Japan, that is causing Kishida in Japan to have the worst approval ratings amongst any elected leader in any major democracy in the world. I talked about this in a recent article that I wrote, and I think I tweeted about this too, but there was an actual ranking of leaders of maybe 20 or so major democratically elected prime ministers and presidents, all that, and their respective approval ratings. Okay, second from the bottom was Prime Minister Kishida. Okay, way below Joe Biden before he even dropped out. All right, much more unpopular than even him. The very bottom, the worst approval rate leader at that time of that survey was then Prime Minister Rishi Sunak of the United Kingdom, and he is no more. So presumably, even with this turmoil going on with protests in the UK, that aside, presumably right now Kishida is the Kishida administration is the world's least popular or most unpopular, most hated government. And he knows that it's yen weakness that's causing that. So the decision to shock hike rates off of the zero bound by the Bank of Japan in July, that was an extremely political move to do that, okay, to strengthen the yen. So you have lame duck like exiting Vice Minister Kanda, the guy who does the yen interventions himself, who had been intervening all throughout his very last month of his tenure that ended on July 31st, to strengthen the yen as his kind of last act. Then he gets this nice job thereafter for doing such a good job by Uchida. Then you also have Bank of Japan Governor Ueda, who is suddenly extremely, extremely hawkish and doing shock rate hikes off the zero bound. This is Japan we're talking about, doing shock rate hikes off the zero bound, okay? And so that happened, right? And then you probably have what I said is another round of yen intervention that occurred on the 31st of June, or of July, right after the Bank of Japan meeting, just as they had done the first time they ever did yen intervention in September of 2022. That was a few minutes after Kuroda's press conference in September of 2022. So they're fine with doing it after press conferences. They're fine with doing it after FOMC press conferences, like in May 2nd of this year. Like, 20 minutes after Chair Powell steps down at 5 a.m. Japan time, blast USDJPY down five handles. So I'm pretty sure that that's what happened. And the thing is that doesn't have to show up in the yen intervention data for the month, because that data cuts off for the 31st. So we'll never know. Okay? Well, we will know, but we'll know within a month. So, now that you have through 152 and all that, the resistance levels are very much futures based. Okay? You can see an uptick in futures activity and all that in trading volume. And the reason is also because nobody was really, like, human active managers at least, were really shorting JPY as dollar yen was going above 152, okay? So, like, dollar yen from 152 to, like, 162, that whole range, there weren't, like, really anyone who had shorted in that area. So they could intervene all they want to, but they weren't really they weren't short squeezing anyone. No, like, nobody's position was getting touched, right? But 152 and below, that's where you do have some actual shorts that not only are seeing their once very profitable short trade gains getting, reduced and cut down, but now they're potentially in a situation where they're losing money. And because they're short, you could have infinite losses, and you'll start seeing short covering, okay? But those are a lot of these futures to short the yen, all right? That's why I'm using futures, and that's why I realized that's why I have to look at not spot dollar yen this time, but you have to look at yen futures as support and resistance levels, okay? So that's what occurred to me, and indeed, that looks like it's the case. So let's just take a look. These are just round figures, okay? I know that these look weird, like 0.0068, but those are like the round number figures. 68, 69, 70, all right? 71 looks like top on JPY, okay? Again, this is inverted. I'm just going to keep doing this, like, just to remind you. This is how it's supposed to look, and it's directionally opposite. Let me get rid of the equity indices. Okay, so that's how it normally looks. So this is like the short squeeze, 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 squeeze. Then 71 looks like there's resistance here. Or, if I invert it, it looks like support level for USDJPY. And indeed, like you can see, like on volume too, like you can see where the volume levels are, right? There's, what is it, right here, there is 20,000 contracts traded when it ripped through here, okay? 20,000 contracts is a lot of notional, considering that each JPY futures contract on CME is 12.5 million yen notional for each one, all right? So, but this is the great thing about futures markets and like exchange listed derivatives. You can see that like here is another spike of volume. And what does that happen? That happens when it slices through 70, okay? You see like right here that there is clearly a support level here. And here, by the way, on dollar yen is a very arbitrary 141.87. Okay, so either there's a 141.87 support level for dollar yen, or there is a 71 upside resistance level for yen futures, which are very crowded and actively traded. Okay, so it's yen futures. So that's basically the methodology, right? And so that's why I'm saying, that's why I was looking at this from earlier today, and said that here is top, because this was tested, topped, and this topped as well, and going to cash close, and there's going to be downside. Now it looks kind of interesting because we might be, as I'm recording this, we might be testing it yet again. And I suspect that we might see, top here as well. So, if I were like a short-term, I guess I am, but if I'm short-term trading like index futures directionally, I wouldn't be looking at NASDAQ or Nikkei levels at all. I don't care, because they're not moving on their own accord. They're moving to what the yen is doing. So it doesn't matter how high NQ futures go, or September Nikkei futures go. I'm just waiting for yen futures to hit this level. Once it does, and I actually see it actually turn around, and sometimes there actually is a delay too with these indices that follow. It gives you kind of a few minutes heads up. But once I see that, I can confirm that, that's when I'll say, okay, now I can step in and short, or play the directional turn in the equity indices. And I don't care what level those equity indices are at all. I don't even know where they're trading. I don't care what figure they are. And so therefore, things like limit orders, Nikkei futures or NDX futures, are totally useless, because you don't know where that could be. The NDX could just keep going and rising for as long as the yen isn't hitting these levels. But once it does, that's when it'll make its turn. Okay. And by the way, this short-term trading commentary, for those of you who are not short-term trading degenerates, the reason that this matters is because the reason that I make short-term market commentary, or short-term price action commentary, more not trading commentary, but price action commentary, is because that matters to you too if you're a buy and hold long only person. Because for many reasons, but just for one, is that at some point you're gonna have to transact in markets. You're gonna have to buy or sell something, and when that time comes, if you have no idea what the hell you're doing, it's not that you're going to get yourself a very bad fill, who really cares in the grand scheme of things, but what's more troubling, and what's really only troubling and most troubling, is that if it's time for you to execute your order in markets, to buy or to sell something, first of all, I'm sure a larger size portfolio size, so it's going to be, larger notional, and you're not going to have the confidence. You're going to freeze up, and then you might just completely miss buying or selling whatever it is that you needed to do to actually execute the order. You have to at least not proactively ignore and say I'm not a short-term trader, so I don't care about that. No, you have to get that mentality out of your head, because when it comes time for you to transact, you need to think that you know what you're doing, so that you'll at least execute the order. Good or bad as the results may be, at least you'll get it done, rather than get frozen and stiffed up and not even get it done. Okay, and especially in super volatile times like this, Nikkei dropping 13% in a day, that would be a time where you have to deal with fast-moving markets if you want to either get out of risk or buy into. And how the hell are you going to do that if you can't even do that during kind of more sanguine times, right? So as we're watching this potentially happen or not, let me just walk you through what the hell happened with Uchida, Bank of Japan Governor Uchida. What kicked this whole thing off? Okay, so right there, this blue right here, this is 10:30 a.m. Japan time. This is when everything kicked off. And what was attributed to this? Whatever happened here? What happened? Well, apparently, according to everybody and their mother, this is one of the I've heard so many stupid market explanations. This has got to be one of the worst. So, Deputy Governor Uchida, who people who have followed me before on Bank of Japan, you've probably heard me talk about him. He is the one person at the Bank of Japan who, when he speaks, I take very seriously. Okay, he is the policy architect of Japan. He's a BOJ lifer. He's been there for before Kuroda. His title was something like, head of monetary affairs, or executive director of monetary affairs of the Bank of Japan. Okay, meaning he designs policy and he executes them. Okay? He's the Walter White, the Heisenberg of, if Gus Fring or whatever is like the Bank of Japan head, he's Walter White, like, who's actually doing the formulaic cooking and understands like the monetary chemistry of things, right? Designs yield curve control, executes it, trading bands, all that stuff. He knows how, he's been in the trenches. Okay? So when he talks, I'm gonna listen. So he had a speech today. And so obviously I'm gonna pay attention to him, alright? And it's also because, look, with all due respect to Governor Ueda, and I don't mean to sound mean, but dude, you were a college professor like a year ago and suddenly thrown into this job that you didn't necessarily want, but you took, and God bless for serving your country, but you're not cut out for this, okay? So Ueda doesn't understand, like, the mechanics of policy is so market-oriented, and the reason I imagine he's a college professor is because, I'm not saying that as a, disparaging thing towards college professors. I'm saying that he's taking an academic background for a role that is so market-facing, market-oriented. Its policy, the Bank of Japan, right? So, are you guys seeing this like this lightning? I don't know if you can see the background in my window. All right, so Uchida talks. He gives a speech today. All right, but he gives a very generic sort of speech. Okay, I'm trying to find the quote right now that everyone's the thing that like causes this massive 1030 market move was okay, I don't have the exact quote, but basically Deputy Governor Uchida said that during times of like market turmoil, the Bank of Japan will not raise interest rates. That's what he said. That's what he said. And that's what apparently caused and started and sparked this move. Now, my God, like, I've heard of stupid things before, market explanations. But this has to be one of the stupidest ones I've heard in recent memory. Forget the fact that it's Bank of Japan Governor, Deputy Uchida. Forget that, okay? A central banker saying we will not hike interest rates during times of market turmoil. No shit! Like, this past week, okay, on Monday, when the Nikkei was down 12%, that triggered a whole host of like narratives and discussions about the Fed is going to potentially have an emergency rate cut and like pull forward rate cuts and all that kind of thing because of this. Which, not only is that ridiculous, but it's ridiculous for reasons that I have a very differentiated and very original take on why it's ridiculous. And it's not just because of what everyone else is saying. Like, if the FOMC cuts rates, that's going to further exacerbate the yen carry trade unwind because it's going to strengthen the yen. That's not at all my message. I'm actually going to be recording the rest of this video after I'm done recording this, because that was a question asked to me by a subscriber about what do I think about like short-term interest rate futures and the yen. And I think that if he's going where I'm going with this, I think it's a brilliant question. I looked into it. I'm going to have a whole presentation to it. So if you want to see that part, please subscribe to Across the Spread. Join the conversation. You can see it. The very basic premise of what I'm going to say about that, my thinking, is that, and this is very important too, okay? When it comes to like these emergency like intermediate rate cuts and whatever, right? Even like more generally speaking, you've heard me talk about this before, okay? Right now we're in a state of position unwinding. Okay, forced exiting out of crowded positions, liquidations, and all of that. And when you have to force yourself out of something, it's not done in like a best execution method. It's get out, period. It's not price sensitive. It's execution mandatory, right? Just get out at market. And so that creates very big swings and very large moves in markets. And it creates some very weird movements in markets when people are exiting things. And people have to sometimes exit positions, and they have to liquidate other positions that they hold that have nothing to do with that original position, simply because they need liquidity. All right, and so, and one such major player in this is like systematic funds and CTAs and trend following accounts. Okay, and CTAs and trend following accounts, they engage in trading listed derivatives in liquid futures markets across asset classes, from gold to currency futures to currencies themselves to equity indice futures to the crude oil to rates to whatever. But amongst one of those instruments that they trade in are short-term interest rate futures, like euro dollar future, or SOFR futures, 3-month SOFR futures, which is basically the equivalent of like Fed funds futures. They might even trade in Fed funds futures themselves, okay? But that is still part of the menu of things that they take directional trend following sort of positions in. So when you have like massive unwinds of positions because the JPY carry trade or JPY is just getting blown up in everyone's face, short JPY is the most crowded and best working trend for CTAs year to date. Just short JPY, and that was, creating a massive amount of alpha until things like yen interventions happen, right? And then this last one on July 11th at 8:43 a.m. Eastern Time, that yen intervention that was top tick in NDX, that yen intervention had unwound a lot of these positionings. Things like, if you were long the NDX, short the Russell, that's why you have the Russell 2000 skyrocket and the NDX plummet at the same time for like a 20% performance differential in the matter of days. It's not like new longs going into the Russell. That's just position exiting, okay? Or things like short 2-year US Treasury futures. Well, if you're forced exiting that, you're going to have to buy cover 2-year US Treasury futures. And what do you see in 2-year US Treasury yields? You see like 80 basis point drop in a matter of days. From, 4.4 to 3.6? Right? So that is not reflecting, like, the market's kind of view, the collective view and sentiment and repricing of a new perceived reality. No, it's just, like, messy exiting, okay? So, my broader point is, like, we cannot look to markets that are telling us things, that are, like, saying recession or this. No, they're not telling us, like, the markets don't always know everything. That concept, we really have to underweight, relatively speaking, like the legitimacy or the reliance that we have upon like market signals and what they're telling us, okay? What they're telling us is just, what market movements are telling us are that green and red blinking tickers are being bought and sold. That's all it's telling us. Why they're being bought and sold, there's a whole host of reasons for them. And it's not strictly because these are new positions that are being opened by human beings and the collective human being net positioning and repricing of things, of the new reality with the latest updated information. It's not a reflection of that, okay? So, with all that said, if you're unwinding a trend of shorting, short-term interest rate futures, then you're going to have to buy them back. And therefore, that's going to appear to look like Fed funds futures or like the short-term interest rates markets have priced in suddenly a intermediate Fed rate cut, when really it might very well be and likely is liquidations, okay? All of these people besides, what's his name? Fucking Jeremy Siegel or whatever from UPenn, Wharton or whatever, who was on CNBC saying, like, we need to have 75 basis point rate cut immediately, and we need to have another 75 basis point rate cut, like, in September. Besides that one guy, how many people actually believe that you're going to have an emergency rate cut and then another 75 basis points in September because of the Nikkei blowing up temporarily, for which it reversed? Nobody. Right? Nobody. Like, I've never heard, everybody's saying that's kind of ridiculous, that's not going to happen. And so then who's putting that trade on? Nobody. That's force exiting, probably, these positions of being correctly, up until then, short Fed funds futures, SOFR futures, short-term interest rate futures. Because the Fed hasn't done anything. They haven't cut anything yet. Higher for longer, right? That's what CTAs do. They take the emotion out of it. They just go with the trend. Trend has been that rate, the front end like policy rate, Fed funds rate has been high in the US. All right. Anyway, I'm going to get more into depth with that after this. I'm going to get more into depth with that. This like thunderstorm is very fitting, I suppose, right now. But back to what Uchida, Deputy Governor Uchida was saying, okay? No rate hikes during times of market turmoil. Okay? No shit. All right? Like I just said, we were just talking about rate cuts from the Fed because of that. So him saying no rate hikes during times of turmoil, do you think that justifies that kind of move, this move right here? Okay? Because what that implies, if you believe that, what that implies is that that markets thought that the Bank of Japan would hike rates during times of market turmoil. But then Uchida had now explicitly, taken that off the table, and so what you're seeing now is a massive relief rally that a central bank, let alone the most accommodation-addicted central bank, the Bank of Japan, wasn't going to hike rates during market turmoil and the repricing of those expectations. Come on. If you're watching this right now on the Cross Spread platform, you're all smarter than that, right? I'm sure that none of you guys, you're skeptical about that. For everyone else, come on. That's not what it is, okay? I could say that for the JGB futures market, that might be potentially part of it, because he made other remarks too regarding, let's see, he said, for the time being, it's necessary to maintain current level of monetary easing. Okay, so I suppose that could be interpreted as maybe walking back the tapering that they just announced, but no, that's me being generous. If he's saying for the time being it's necessary to maintain current level of monetary easing, well, they had the path laid out, just maintain with that, which is what that would mean. So I don't even think that that's what it is. Also, there was a Bank of Japan JGB buying operation today that was announced at 10:10 a.m., so there could be reactions to that from the long end. There's also a 30-year JGB auction tomorrow that people might be, positioning beforehand, or, there's a lot of other factors mixed in with that, but that's why I can see why 10-year JGB futures would move on that, which they did, and, JGB long-end yields would drop, which they did, but, the yen and the equity market rally, no, okay? And I'll tell you what I think it is, at 10:30 a.m., what it actually was, all right? But one more thing I'll say is regarding Deputy Governor Uchida's comments. What he's saying there, we're not going to hike rates during market turmoil. Okay. Well, that means that you're going to hike rates during non-turmoil. And that is exactly what they had been communicating at the July BOJ meeting anyway. They were saying, if the outlook remains, we're going to continue to hike rates. Not if inflation actually exceeds our expectations, we're going to have to hike rates. No, they're saying if it stays in line as what we're thinking, then we're going to continue to hike rates. That's what they are saying. So nothing new was said by Uchida, right? During times of market turmoil, we're not going to hike rates. No shit. And then if you want to extrapolate even further, therefore, during times of non-turmoil, we're going to continue to hike rates. That's what we all knew already, okay? So, again, nonsense. Why am I harping on this so much? Because take a look at the fucking financial media right now, and that's 100% of what you'll see. So if you're thinking, I'm inundating you with saying the same thing, it's, first of all, more accurate, and second of all, less omnipresent than the falsehoods that are being put out there by those who are trying to explain green and red blinking ticker price action. All right. With that said, let me tell you what I think has happened here. What I think has happened is that at 10:15 a.m. Japan time, or at 9:15 a.m. in Beijing and in Hong Kong, that is when the PBOC does their daily fixing for their Yuan reference rate. Okay? Now, the PBOC has been trying to keep the Yuan from weakening. And they've been doing so by just doing very strong fixings versus expectations, right? By over 1,000 pips stronger than expectations, okay? Well, today, because of the recent yen strength that had actually helped all the other regional currencies, right, including the Yuan, today the PBOC actually done the weakest fixing in I don't know how long, but basically almost no gap between the between the expectation, the actual fixed rate, and the kind of expectations for it. Okay, so China's support for yuan through daily fixing is vanishing like off of a cliff. Okay, because they don't need to strengthen via these fixings as of current. And so as a result of that, you got, this is dollar CNH right here in orange, and you got that move. And that happens at 10:15 a.m. 10:30 a.m. is China market open. And that move, I believe that is what had pushed the yen, right? Let me get rid of like some of these overlaps. If I lose power, by the way, good to know you all. Okay. Like, you could see the chronology. You could see at that moment what had pulled what up. Okay? So, that's what that was. And by the way, the Uchida document, that, once again, that said absolutely nothing, but the Uchida speech, like, translation or whatever, is like 27 pages long. Who the fuck read all of that and immediately just, you know, did that, right? So, what, headline scanning algos, all that? Probably. Maybe. You know, likely so. I mean, these are all futures driven. But I believe that it was driven by the PBOC with their sudden, like, extremely kind of, you know, absent supporting of the yuan for once for this daily fixing that kicked all of this off. All right? So I'll leave it at that. And so, therefore, before we go, let's just take one last look at where we are. It appears that there's some sort of, like, resistance level at around these levels. And so, like, you know, that would be a good level to short. I don't know. Maybe you have no idea what I'm talking about. Maybe, you know, it's Deputy Governor Uchida who said that the Bank of Japan is not going to hike rates during market turmoil that did that. Yeah, maybe that's what it is. You guys did not need my analysis for this. You guys are smarter than this. But I'm just letting you know, and I'm just showing you in green and red blinking tickers, the nonsensical nature of this explanation. Okay? So, I'm going to now, unless I get a blackout, I'm going to further discuss and go into this, like, short-term interest rates and, like, these repricing of the Fed expectations thing. That is not an actual repricing of the Fed. That's a unwinding of markets and all that kind of thing, and that people are reading too deeply into and thinking that that's actually what is being priced in. So if you'd like to see that, join me at Substack, and if you'd like to even ask your own questions so that I can address, I'd love for you to join, and I would love to discuss it, because sometimes I don't know what the best questions are, and you guys do. Alright? Till then, good God, pray for me. But we'll see you soon. Thanks. Bye.